Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Segun Lawson, who is CEO at Thor Explorations. Hi today, Segun.
How are you, Zak? Good to speak to you.
Well, I think we haven't spoken for a year or so, and you've been making great progress, more than most in the market. You are the proud owner of Nigeria's largest gold mine as well. What's the latest at Thor?
Well, we just announced our full year results for 2024, which we were very happy with. Obviously we were supported with a strong prevailing gold price. However, we were very disciplined in terms of our cost control, and it was a very profitable year for us. We had a record revenue of $193 million, an EBITDA of $133 million, and a net profit of $91 million. We also announced as a company, what I believe was a milestone announcement, our maiden dividend, and formalized our dividend policy, which is 1.25 Canadian cents per share per quarter. So over the course of a year, 5 cents dividend. So looking on both the AIM and the TSXV, looking at our closing prices yesterday, it's a very strong yield, north of 12%. Based on yesterday's closing price. But I think more importantly, it demonstrates our commitment to returning money to our shareholders from our strong cash flow without impacting our growth ambitions in a sustainable way. So we're very pleased with how we've performed. We're very pleased with this milestone as well.
Well, there's so many things which are good there. I suppose the maiden dividend makes you a grown-up company. It's also paying a dividend is rather rare for AIM companies these days, and even producing is rather rare for companies in your sector that tend to make excuses for not doing anything apart from raising cash. I think one of them, in terms of the highlights, something which is interesting is the all-in sustaining cost, which is only $765, which is probably the lowest I've seen. For many companies, most of them are sort of nearly double that. How much effort have you put into getting that cost down, and is it actually that necessary?
We've put in a lot of effort. It's also, we're putting a lot of high grade material through the process plant. Our lower grade material, which takes some cost, is going on the stockpile as well. We are fortunate that we're in a jurisdiction where we have the supply of compressed natural gas, which powers our process plants as well, which has enabled us to be very competitive in terms of our power price. We still do rely on diesel for our mining fleet and our trucks. However, the diesel price in Nigeria has also reduced and stabilized as well. So it's a combination of a lot of elements and also discipline by us to stay on top of our costs. And, we're very pleased with the outcome. We have a all-in sustaining cost guidance for this year between $800 and $1,000 per ounce. And we're tracking that nicely as well.
The average sale price, just under $2,300 an ounce. Presumably going forward, that'll be nearer to 3,000, which is the magic number at the moment. I think we're just below that now, but that's obviously something to look forward to. And presumably you're also looking forward to the expansion in Segilola and drilling at Douta as well.
Yeah, that's correct. I mean, if we start with the average sales price, we did have a hedge book last year for about a quarter of our production. We got to December and accelerated the repayment of the hedge book. As we speak today, we're completely unhedged, so that's all been fully repaid. So we've got exposure to the gold price going forward, and I think that's also aligned with our full repayment of our senior debt facility, which was paid at the end of December. So we're strengthening our balance sheet. We're generating strong cash. We're building up cash every month now as well. And that has also left us in a position, as you say, to invest more in our exploration. in Nigeria, and also in Senegal, where, we don't have the overhanging burden we have had historically of servicing our debt. So a lot of cash has been freed up to advance this exploration a lot more aggressively, should I say. So these are the key, should I say, outlook highlights that we've earmarked for this year that we're looking to achieve. Number one, which is of utmost priority, is trying to extend that Segilola mine life. And then number two, we have this project in Senegal, the Douta project, which we're advancing through to PFS. Now that's taken a couple of delays, and the most recent delay, I don't think is a negative at all. It's a result of drilling 2 discovery holes in easy to mine, easy to process oxide material at a very decent grade, above 2 grams per ton, and 20 meters wide from surface. So we have agreed internally we're going to push ahead with drilling at this new discovery, which is on a 3-kilometer long structure, and then try and finalize the PFS based on incorporating these results, because these ounces, should they continue on this 3-kilometer structure, will certainly leapfrog any ounces we have at the moment to be, in the initial parts of the mine life, where it's going to be easily recovered. And this could have a material impact on the economics of the Douta project as a whole. So we think it's a delay worth having. We're not doing a PFS for academic purposes. We're looking to build this mine as our next mine in our portfolio, and we're doing a very detailed PFS, which we're positioning ourselves to accelerate to a DFS very quickly. So that's all very, very exciting. And then to add to that, which you didn't mention, we did expand into a new country last year, Côte d'Ivoire. And we've had some very encouraging initial exploration results from there, and looking forward to pushing forward with exploration there as well. So there's a lot going on.
Right. I mean, there's so many highlights, and it's almost churlish to go into anything negative here, but maybe this is worth exploring. West Africa tends to be, for many UK-listed companies, explorers, developers, almost like an elephant's graveyard. Something always tends to go wrong. How have you managed to avoid those pitfalls, both in terms of jurisdiction and operationally?
Look, I think in Nigeria we are a first mover. This is the only large-scale commercial gold mine in the country, so it's a bit of an unknown for the mining sector, the mining, should I say, universe internationally. However, outside mining, it is a sophisticated economy. It's got a huge oil and gas sector that's succeeded here in London on the London Stock Exchange with a number of companies. It's got a big, sophisticated banking sector, telecom sector. So, for us operating in Nigeria, we've had the comfort of knowing there's a strong mining code, there's a good business environment, they're highly educated people. We did have, should I say, a minor setback in late September, early October with the state government, but that's all been resolved with the regulators at federal level commissioning a fact-finding committee to issue a report, and which showed there was no wrongdoing on our side. So we've managed to operate there without interruption, and it's a jurisdiction where there's a lot of business going on, large scale business. And then the second country which we operate in Senegal, I believe it's probably the only West African country that hasn't had a coup, and they've got a track record of successful gold mining operations there as well. So we're very happy to be there. And we've just expanded into Côte d'Ivoire, like I said, last year, which has been a real success story in terms of gold mines. The number of gold mines that have been discovered at grassroots level and then built over the last 10 years just shows the prospectivity of the country and the willingness of the government to cooperate and help mining companies advance. So we think we're in the right jurisdictions. We continue to abide by all the regulations and hope this continues. And we have taken a long-term view in each of these three countries. In Nigeria, we've picked up more ground. We're advancing exploration. In Senegal, we're looking to actually build a project that will have a mine life, hopefully north of 10 years. And in Côte d'Ivoire, we've assembled a portfolio where we're looking to advance these into where we are in Senegal and Nigeria. So we're diversified by jurisdiction and stage of development, but we do think we are in the right jurisdictions in West Africa.
I was going to say that perhaps part of the reason that you managed to coast along in these traditionally difficult areas is your own personal skill and ability, but obviously you can't comment on that. But nevertheless, with all these great metrics that you've got, do you think there's any discount in the market in terms of the valuation of Thor because of where it operates? So rather than being 167 million market cap, it would be 250 if it was in Europe or Australia.
Oh, I think without a doubt, I think there's a big discount. Nigeria being the bigger unknown, and certainly secondly, the Segilola mine life. Once we can provide some tangible evidence of an extension of this mine life, I think there will be a manner of re-rating. But look, I think instead of talking the talk, you have to walk the walk. And over the last 3 years, we have produced north of 85,000 ounces each year. We've done it at a low cost. We're now returning money to shareholders and have committed to do so over the next 2 years. And look, if people still think there are these jurisdictional issues, we're actually walking the walk now. And at the end of the day, the numbers will speak for themselves. So I do expect some discount to be attached to us based on our jurisdiction. But I think the longer we can continue to perform, it's just a matter of time before that discount narrows or completely disappears.
So rather than 25p a share, let's say the Canaccord price target of 35p would be one that you'd be comfortable with.
I still think 35p is a discount. I'll be comfortable with above 35p. I think, given the cash we're generating and our growth prospects, I do think there is a lot of exploration upside here.
Right. Just finally, you've done a lot of dirty work over the last few years, and we've talked about, we've had interviews periodically as well. I suppose the $64,000 question in this market is: do you think that having done all that work as a small cap company, do you think that the majors might look at you and say, well, actually, Segun's done all the dirty work. Let's just acquire this company and take his production and take that value?
Look, nobody knows what anyone else is thinking, but what I can say is we're fully committed. We have significant skin in the game in terms of the management team and the board. We have a very, very friendly and defensive, should I say, share register. We're in a jurisdiction which we believe we have a competitive advantage over. In fact, I'd go as far as saying over any major in Nigeria. So I think, look, we have a long-term view of how we can deliver this value to our shareholders. And I think, once articulated that, we can even get more support. So our position is we're not looking to be taken over, or we're not looking to step away from this. We, like I mentioned in my previous comment, we think there's a lot of upside to come. We're in a strong gold price environment, and we're here to continue to deliver in terms of our performance. So I don't think that hasn't really crossed my mind, and I don't think the majors would have a competitive advantage in terms of what we're doing now in the jurisdictions we're in. And look, we just keep focusing on what we have to do.
Well, we look forward to your focusing going forward. In the meantime, Segun Lawson, CEO at Thor Explorations, thank you very much indeed.
Thank you very much. Thank you.